Is this the end of the SEC's war on crypto? That question started circulating the moment news broke that Caroline Crenshaw, one of the most outspoken skeptics of the crypto industry inside the U.S. Securities and Exchange Commission, is stepping down. This matters because Crenshaw wasn't a background figure. She represented a philosophy inside the SEC that consistently pushed for strict oversight, aggressive enforcement, and extreme caution toward anything crypto-related. Her presence shaped votes, dissents, and the tone of regulation in ways the market felt directly. Crenshaw joined the SEC in 2020 and quickly became known for her investor protection-first approach. In practice, that meant skepticism toward claims that crypto markets were mature, transparent, or resilient enough to justify lighter regulation. Over the years, she repeatedly warned that retail investors were exposed to manipulation, conflicts of interest, and opaque market structures. This is why she was widely labeled anti-crypto, not because she opposed innovation outright, but because she consistently argued that the risks outweighed the benefits under existing conditions. Her stance became most visible during high-profile decisions the crypto market cared deeply about. When spot Bitcoin exchange-traded products were approved, Crenshaw publicly dissented, arguing that approval sent the wrong signal about the safety and integrity of the underlying market. While other commissioners framed these products as a safer on-ramp into crypto, she saw them as regulatory endorsement of a system she believed still lacked adequate safeguards. That contrast turned her into a symbol of the SEC's enforcement-heavy era, especially as crypto companies faced lawsuits, Wells notices, and years of regulatory ambiguity. The resignation itself was formally presented as a routine departure, but the context matters. Crenshaw had been serving beyond her original term while awaiting a successor, and her exit shifts the internal balance of the commission. Even a single seat can matter when controversial votes come down to narrow margins. Removing a consistent dissenting voice increases the odds that future decisions lean toward clearer rules, negotiated frameworks, or approvals that previously faced stronger resistance. The immediate reaction from the crypto industry was less about celebration and more about tone. Builders, investors, and legal analysts interpreted the move as a possible softening of regulatory hostility. Markets tend to trade expectations, and the expectation here is not that the SEC suddenly becomes pro-crypto, but that the likelihood of surprise enforcement actions or blanket opposition may decrease. That perception alone can influence sentiment around assets most exposed to U.S. regulatory risk, including Bitcoin, Ethereum, exchanges, and infrastructure tokens. What changes at the SEC now is subtle but important. The agency remains powerful regardless of who occupies individual seats. Enforcement staff, ongoing investigations, and existing lawsuits don't disappear. However, leadership dynamics influence priorities. They shape whether the SEC leans more heavily on regulation by enforcement or invests effort into formal rulemaking that gives the industry clearer boundaries. Crenshaw's absence slightly tilts that balance toward the latter, though nothing is guaranteed. There's also the replacement question. Until a new commissioner is confirmed, uncertainty remains. A future appointee could be more accommodating, equally strict, or stricter in different ways. That's why this moment isn't a clean bull signal or a regulatory reset. It's a probability shift, not a conclusion. From a market perspective, there are two sides. The bullish case is that reduced internal resistance could lead to clearer rules, fewer abrupt enforcement shocks, and a regulatory environment that institutions are more comfortable navigating. Clarity, even if strict, is often better for markets than ambiguity. The bearish case is that the SEC as an institution hasn't changed its mandate. Investor protection remains its core mission, and enforcement actions can continue regardless of tone. Overconfidence here would be a mistake. Zooming out, this resignation fits into a bigger picture. Globally, regulators are competing on clarity and attractiveness. Jurisdictions in Europe and Asia have moved faster on defined crypto frameworks, while the U.S. has relied heavily on enforcement. Pressure has been building for recalibration, not because regulators suddenly love crypto, but because uncertainty pushes innovation offshore. Crenshaw herself warned that shifts inside the SEC could weaken investor protections, which highlights how contested this moment actually is. For investors, the key is not to confuse narrative with fundamentals. Short-term optimism can move prices, but long-term outcomes depend on court decisions, finalized rules, and how projects adapt. For builders, this is not a green light to relax compliance, but a reminder that serious legal and governance standards are more important than ever. For institutions, nothing changes the need for risk controls, custody standards, and regulatory clarity before large allocations. So does this resignation matter? Yes, but not in a simplistic way. It's symbolic because a prominent voice of skepticism is gone. It's structural because internal dynamics at the SEC do influence outcomes. But it's not a magic switch. The real question now is whether this marks the beginning of clearer rules or just a quieter phase of the same battle. Is this actually bullish for crypto or just noise the market is overreacting to?